Welcome to TradeTheMBI.com. This is Jonas Reporters for the 29th, and big end to the month here. It's just been a skyrocket since the start of the year. No change in that. The ABM has been following it beautifully. It's a busy week coming up here. You got State of the Union, release the memo, all sorts of other intrigues from a political standpoint. Not to mention a market that has moved a dramatic amount based off the tax cuts and the side effects from that. So it's been quite a busy time as far as business, when traditionally things are usually pretty calm in January leading into February, because it's winter time and things just have slowed down. Now, it was interesting, GDP numbers seems rather bizarre, having such a reduction given what we're seeing in general economic activity. So that was quite a surprise. We'll to see if that gets revised or what the story with that is. The continued battle between, is the dollar going to be rising, falling, discussion between Trump and Mnuchin is an interesting one as well. And all those are having a little bit of an impact, but the reality is that we're looking at corporate earnings that are rising and a general momentum, and that can carry things quite a bit. Now, yes, we're way overbought. You still have cyan well under red. Potential here of a small dip, but we're no longer above the plus 13.5 for the orange DOC, so the likelihood of catastrophe, not likely. We had this huge move, though, at the end of the week, so filling it back in, typically a third to a half, is normal. And the question now is, now that you started this next run of the shakeout, if it peaks out and starts to move lower, you're going to have a higher high on a lower shakeout. That tends to be problematic and usually gets filled back in significantly. So bear that one in mind. NQ likewise doing the same thing. But see, the NQ had this constant buildup of the shakeout and then began a little bit of fade, but it started back up again. So it's going to have to come back up to the previous level as well. Looks almost identical to the S&Ps right here, just a little bit cleaner. So they finally have matched as far as an algorithm standpoint. The giant pump in the euro, still there. A little bit of fade from the steel fade as we ended up with orange now popping up above, but we don't have the green cross below, so probably going to be a muted decay right there. And some people are talking about the potential now that bonds may actually fall because of interest rates and or inflation buildup. The inflation buildup is going to take a little bit of time because, again, you still have to reach a point where the labor market has been completely utilized and you have a forced wage increase. The fact that these people have gotten so many bonuses and things like that, not going to have quite the same effect as actual wage pressure from limited labor supply. So it's a bit different dynamic. You can't incorporate the two together. Oil, that continued rise. This is going to have the ripple effect, and this is what's going to start happening in March, April. You'll start to see the effects of this early rise from the end of the year. It won't be modest, but it'll start to pick up pace and move pretty quickly for some people able to capture the price differences between products, and so having to fill those up. The smart ones have already increased their prices to take care of it. We won't know about those numbers just yet, but it'll be interesting to find out if we start to see that, because the smart ones will have anticipated part of this move and know that their ability to refill products is going to come at a higher cost. And we'll see if that price escalation or inflation transmits itself, and that really becomes the key. And gold, still at the elevated levels, got a little bit away from the ABM, came back to visit it. Now we're starting to see a little bit lower shakeout. Same situation here. I mean, these look almost identical to the S&P, so you're seeing kind of a very similar marking throughout quite a few different commodities, equities, futures. That's going to require a little bit of, I would say, backfilling, the easiest way to describe it. So look at this beautiful run. There was nothing to even talk about. It just was straight. Then we finally reached a peak with the cross below, where we ended up with our steel getting well below the 13, and then the full DOC spread, which finally took place right there as we broke the ABM at the 2874 range. And what have we done? We've come right back to a 50% retrace. Did we get a full reset? No. Orange didn't dip below, so likely that this is going to have some continued issues. We may see a little bit lower, or it has to stabilize until we see that, because right now it's sort of stuck in the zone, so to speak. So that's going to happen. I'll be sending out indicator renewals, so you'll have those. Hopefully I'll have the adjusted paint bar and indicator combination ready for sending out. I've been doing some testing on it. It's looking pretty good, but I want to make sure it's completely set before I get it out to you. But as always, though, we'll look for you on the Skype chat. Trade well.